let's also talk about here Wynn Resorts moving right along this morning. Wynn Resorts is out with a mixed picture on its quarterly results. However, the company announcing this morning its plan for a private offering of $600 million of Wynn Resorts Finance senior notes due 2031. A brighter picture on the earnings front for MGM Resorts, though, International, beating revenue estimates and reporting a narrower than expected earnings loss here. I just want to kind of swing back to Wynn Resorts for a hot second here. One thing that I've been doing a quick control command F on in these earnings reports and the earnings calls as well is anything on Macau, anything on China. And you heard that in the Wynn call last night from Craig Billings, the CEO there, saying that the recent actions in Macau and mainland authorities reopening the market give them some good confidence that the difficulties are behind them here. So to what extent that begins to show up in future earnings reports, that'll be something to keep a close eye on here as we move forward with regard to this broader kind of reopening to the travel and tourism landscape here too.
Yeah, that's a good tip, Brad. Just in reading earnings calls in general, I know we're focused here on Wynn, but read some of these transcripts and just pull out keywords. Some of the keywords I use to just mine this data. Right now, it's China, it is disinflation, and of course, it's economy. And you'd be surprised some of the themes that you can quickly put together just by doing that.
I mean, it's hard to overstate what a dramatic change these businesses had over the past few years, because they had been so weighted to China. I mean, both of these companies, whether you're talking about Wynn or MGM, both of them get Vegas revenue. They get other regional casinos in the U.S. In the case of MGM, it's a bunch of them. In the case of Wynn, it's mostly Boston. And then you have China, mostly, or I guess all in Macau, right? And the China revenue had basically gone away over the past few years, both because of regulation, then obviously because of COVID. So now they're essentially trying to rebuild that business. But the shift in revenue, I mean, I can't imagine working in an operation. You know, you must get seasick from the sort of back and forth that happens from that. And that's still the case, that the China revenue is much smaller as a percentage of the whole than it was before.
Yeah, they gave actually some stats to that effect as well, to your point, Julie, saying the Chinese New Year holiday period, in that period, the casino, the mass table drop actually reached 95% of 2019 Chinese New Year levels, strong play across the spectrum, and premium. And within this premium experience, people go into casinos, you know you're going to spend money at the end of the day. It's like when you're going to Disney World, you know you're going to spend money.
You just surrender. You say, this is what's going to happen.
Just take my money. Just take the cash here. And that's a specific part of the experience economy that is perhaps a divergence between where you're looking to find value in that experience economy and find a deal versus where you just know you're going to spend and who's best to benefit from that. Perhaps it could be some of the casinos if the golden age of travel still holds true and has some solid tailwinds to it. And then additionally, it could be Disney at the end of the day as well.
In China, they haven't had the bounce back that we've had here, right? They're much earlier in that cycle. They've just opened up. People, I'm sure, are raring to go.
It's your move, by the way, Brad, in our digital poker game. No, we're just kidding.